stopped giving a target for gold or silver because that's totally useless. Because
Exactly.
what do we measure it in? We measure it in something that has going down by the day. So that all I can say is that I think gold and silver will reach levels that no one can imagine today because what's going to happen in the world, plus what will happen to the currencies, of course. So it's really, I'm never worried. I never worried. We had corrections. We had 22 years of ups and downs, etc. But the trend is so clear. It's a long-term uptrend, solid asset that maintains its value. And what's going to happen now, as I said, because of this increase in demand among institutions, among central banks, and therefore also the public, not yet, but it's coming.
8 central banks increased their gold reserves by a ton or more in April. The Central Bank of Turkey was the largest buyer, increasing its official reserves by 8 trillion. With 11 consecutive months of buying, the bank's year-to-date net purchases now total 38 trillion, and it has lifted its total official gold holdings to 578 trillion. The National Bank of Kazakhstan, 6 trillion, Reserve Bank of India, 6 trillion, National Bank of Poland, 5 trillion, Monetary Authority of Singapore, 4 trillion, Central Bank of Russia, 3 trillion, and Czech National Bank, 2 trillion, were the other major buyers in the month. The People's Bank of China reported a significant slowdown in its gold buying. The bank reported that its gold reserves rose by just under 2 trillion in April to 264 trillion, the lowest monthly increase since it resumed reporting in November 2022, and well below the 18 trillion monthly average before April. Egon von Greyerz, the founder and managing partner of von Greyerz AG, formerly Matterhorn Asset Management, argues that I stopped giving a target for gold and silver, but he remains bullish on the precious metals. During the interview with Lynette Zhang, he further discussed that the gold price is going up not because of retail buying. Government spending has spiraled out of control, resulting in a national debt exceeding $34 trillion, which increases by $1 trillion every 100 days. Most Americans are concerned about the sustainability of government spending. The high interest rates are also hurting Americans and sapping their confidence. We will present clips from Egon von Greyerz' interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
No Western central banks are buying gold yet. They will, but they're not. At least they're not selling. But it's the Eastern and the Southern central banks which are buying, and that's a new trend which will last, as I said, for many years. It's absolutely certain. Then, with that and with the price move, and we haven't seen that yet. The price move has not, is not on front pages. Nobody's talking about it. Retail buyers are not our clients anyway. Of course, there is retail buying taking place, but when we look at the figures, it hasn't really started in quantity yet. And we're seeing that too, and the Swiss refiners seeing that too. This is not yet, interestingly enough, gold is not going up because of retail buying at all. And ETFs have been down for almost a couple of years now. Yeah. So the bigger investors are not buying either. But of course, the central banks are buying and the BRIC countries are buying. And that's what really what's pushing up gold now. And that's, of course, big buyers around the globe. And that is the beginning of a trend. I'm absolutely convinced that central banks are now gradually, and that's going to take time, they're not going to rush, they're gradually moving out of dollars as their reserve assets into gold. And that's, as I said, a process that will take some time. If they are totally going to get out of dollars, which I'm absolutely convinced they will, because they don't want their dollars to be confiscated by the US or some other bank, gold is the natural reserve currency or the reserve asset for any country. That is rightly happening, and that's going to be a very long move and take a long time and involve big quantities. And of course, as we both know, those quantities cannot be satisfied physically because we can only produce 3,500 tons roughly per year of new gold. So they can only be satisfied by higher prices. So that's what we're seeing now. But we are only seeing the very beginning of this move. The real move is still to start, and that's going to take many, many years. It's not going to be a straight line and be vicious corrections, etc., even more so in silver. But this is a secular market, which is bull market in gold, which is starting. I'm absolutely convinced. We've seen that in global population in the last 150 years, going slowly up to a billion, and now all of a sudden almost up to 8 billion in the last 150 years, and we're seeing it in debt now. So we will have an explosion in debt. It's inevitable because the US, it's the only way they can get out of this is to print more money. Sure, there is an alternative if they actually have the gold, and if they actually can prove that they have the gold, is to revalue the gold. If you revalue the gold by 10 times or 15 times, that's a way of dealing with the debt, at least for a while. It won't get rid of new deficits, but it gets rid of the existing debt. So that's a possibility that they might try, but the world will demand that they prove that the 8,100 tons of gold is still there. We shall see. We shall see.
The Federal Reserve Bank of New York wrote a report outlining the narratives around declining dollar shares in official reserves and increasing roles for gold holdings by central banks, which it says has been inappropriately generalized beyond the actions of a small group of countries. The Fed now admits some countries are moving to gold. Tech investor and former Coinbase chief technology officer Balaji Srinivasan posted to X, pointing to what the Fed says is a small group that represents 3 billion people. So 37.5% of the world is moving away from dollars towards gold. Egon forecasts the worst investment in the world is to invest in government bonds due to currency devaluation and an increase in the interest rate. He further argues that there is an explosion in the U.S. debt and deficit, and the only way to get rid of it is to revalue the gold about 10 to 15 times. Now, let's get back to the interview.
Central banks are sadly, obviously it was created in order to control the marketplace. Right. And so the bankers have benefited greatly from this. In the short term, when they have crises, and we are soon going to get the next one, and as you rightly said, the only tool that they have is to lower interest rates and then also to print money. And of course, they will do both. I am quite convinced that a bit of a 40-year trend in interest rates that from 1980 to 2021 bottom, that has come to an end, and I think the trend is now up. But as I said, within that, there of course will be counter moves, and as you say, there will be when the panic comes, they will lower rates again, but it's not going to last, and that's why the next phase here will be make it so much more difficult for them to manage the situation, because I've said that for quite a few years, central banks will lose control of interest rates.
Yes, I agree.
The market will take care of that control by the sheer fact that the market is going to dump bonds, because bonds are going down in value by the day, just by the currency declining. And then they will also continue to decline because interest rates go up, even if they temporarily can go down a little bit. Now, we had discussed before, government bonds is the worst investment in the world today. I cannot understand how anyone can buy a government bond because, as I said, you will lose on the currency dramatically. And you will lose on the fact that the bonds are also going to crash over a very long 20, 30-year period at least. And therefore, compared to today, in 20 years' time or 30 years' time, they will be worthless, totally worthless. The debt has to implode, and it will, whether they try with gold or not. And of course, a lot of Western countries don't have the gold. I'm quite convinced whatever the US has, we will maybe never find out. They will obviously lie and refuse to ever have it audited properly. You take a central bank in Europe. Let's take Bank of England, because the LBMA system keeps a lot of its gold in the UK. The Eastern buyers are now increasing dramatically with central banks and the BRIC countries also, etc. A lot of that gold is coming from, because the amount, the 3,500 tons that is produced every year is being consumed automatically, and is not enough to satisfy the increase in central bank now the demand. What happens is, and it's been happening for quite a few years, that a central bank lends its gold to a bullion bank, which is a normal commercial bank. And the bullion bank sends its 400-ounce bars to Switzerland to have it broken down into kilobars, which is what China and India wants. And then the gold is sent there in kilobars. The system then has in the West, the bullion bank has an IOU, which is given to the central bank. So they owe the central bank X tons of gold. When one day the central bank says, "Can I have my gold back?" Gold is in the East. It's never going to come back because it's gone forever. And that's going to happen at some point. And therefore that shortage which will arise, and that will also be combined with, as I said, a lot of the central banks, probably not having the gold. Remember, they count as physical gold any gold that they have actually lent to a bullion bank. Yes. That's still in their balance sheet as physical gold.
UBS previously forecasted that gold prices could trade at a minimum of $2,365 and a maximum of $2,600 in 2024. It has hiked the forecast, claiming that gold could cross the $2,800 price range this year. That's a hike of around 8% from its previous prediction for the commodity. This implies that although we expect prices to ease over the long run eventually, we now anticipate that after adjusting for inflation, nominal gold prices should hold at considerably higher levels than before at around $2,300, the forecast read. The revision comes as gold is experiencing high purchasing demand from central banks, retail investors, and institutional funds. The development has effectively created a level shift higher in gold's trading range, said UBS strategists. What are your thoughts on Egon von Greyerz' interview? Please share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. See you in the next one.